Welcome back to part 2 of Bitcoin Hard Talk, episode 107. The deals that crashed the market. Follow the $1 trillion money. Follow the $1 trillion. Right. Now, in part 2, we're going to be discussing this week in macro. Now, the main topic I want to go through is what created the market crash. So we had a correction. And to put this in context, we're only about 3% off all-time high. However, there is forces that probably indicates that there are manipulative trends, but it doesn't change the long-term fiscal dominant strategy, as we've always covered. They are pumping Federal Reserve money. They will artificially push down rates because nobody cares about the Americans and the economy. They only care about the stock market while we make this transition. And during this transition, the proof of weapons network and the financial industrial complex are hedging strategies. They use tariffs in order to do massive M&A, bankrupt the American companies because the importer pays the tariff. That means the small business are the first to go bust. The financial industrial complex through the private equity industry acquires those companies, consolidates power into the larger financial institutions, the KKRs, the Blackstones and various other nodes on the network. And then it also does that by controlling export flows to try and get access to choke points wherever they can in the export dependent countries. At the same time, it pushes everyone towards China, BRICS, ASEAN, GCC, SCO, the large regional blocks that the proof of weapons network is engineering the change of order to. Now, one of the important relationships to break is the Federal Reserve Bank of Japan relationship as you're pushing out these flows. The way you do that is by weakening the dollar and strengthening the Japanese yen, increasing interest rates so that people can no longer borrow for free. And then you push Japan into needing to sell some of their dollar-denominated assets. So as you weaken the dollar, you're getting a double hit, right? You've got your US assets, you've got a strengthening currency. It takes more of your Japanese yen in order to buy some dollars so that you can buy those assets. And so eventually, rather than propping up the US stock market, you have capital outflows and you sell some of those US dollar-denominated assets, buy Japanese yen, and then repatriate that capital. At the same time, when interest rates go up, you get, rather than 0% on your JJB bonds, which are bonds lending to the Japanese government, you can actually get 2%. You can actually get 3%. And now that becomes more attractive. And so you do the reverse dollar milkshake theory that was pumping all the money into the dollar. And the dollar is propped up by the financial industrial complex. This is not a natural phenomenon. This is an engineered phenomenon. In previous episodes, I covered the petrodollar and the euro dollar, as well as the Japan carry trade. And you have these forces, as well as IMF global debt and covert wars that prop up the dollar. But now you can slowly manage a transition. Because so many people are used to dollars, you've got the DXY, which is the index of dollar priced in euros and Swiss francs and Japanese yen and various other pounds and Canadian dollars. That actually started to push up a bit. And so now they want to knock it back down as we have this managed transition over time. And so we had essentially a correction, a crash in the bond market. And most people that are paranoid about the overvaluation of the market, that don't understand many of the things we covered in previous episodes around the AI bubbles and various other things, they don't understand that, you know, their paranoia kicks in. And so you can trigger a sell-off and a frenzy. You can try and knock the market up by having Nvidia with their amazing earnings and various other things. And you can hedge every position through the financial industrial complex. But anyway, what is the news that came out today? I think it was today. Things are moving so fast, I forget my days. The Bank of Japan essentially came out and said that we're going to be doing a $135 billion stimulus in Japan. And that was after the correction in the market. And so that had the impact, well, prior to that as well, and after that, the yield on the JJB, which is the rate that you need to pay in order to lend to the Japanese government. When the price of those bonds correct, the yield goes up. You have to pay someone more money in order to lend to the government. Now, if you're holding those JJBs, those bonds, right till the end, you get all your money back. But if for any reason you need to sell them halfway through, then you're dependent upon market forces. And so as the price goes down, you need to correct it with higher yields. That's what's happening here. Now, a bunch of hedge funds use the Japanese central bank, like they use Cayman Islands in order to obfuscate their trades. They use Japan in order to borrow at 0%. Then they need to hedge out the currency risk, and then they can invest that and do arbitrage trades as well through the derivatives markets as well. And so that is the Japan carry trade. Now, by pushing up those interest rates, you get people that are exposed, or you get, changes in the dynamics of people that are able to use the Japan carry trade. So that strategically weakens the dollar, strengthens the Japanese yen, and perpetuates these capital outflows. So Japan's 20-year bond hit a yield of approximately 2.75% this week. That is the highest in recorded history. And so the Bank of Japan was used to invent quantitative easing. It was utilized after World War II in order to create these elaborate overinflated markets. And it had that, dead 10-year, the 10-year. But at the same time, Japan protected itself, unlike US, by having massive trade surpluses because it exports goods and it would invest those dollars into, and invest into accumulating a lot of assets. So Japan has a massive surplus. In fact, it holds $3.2 trillion in foreign assets. Other than Cayman Islands, it is the largest purchaser of US treasuries. So $1.13 trillion is invested into US treasuries in order to lend to the government. And so basically, much of their surplus is in their capital, trade surplus. They bought everything into foreign businesses, and that can be brought back in to Japanese bonds. Now they're paying a yield. They now pay stuff that they can get 2.75% on a 20-year loan, whereas previously it would have been 0. And so after hedging costs, holding US treasuries loses money the higher the yield goes up. And so now you have selling pressure potentially, and that's what we saw. As those rates go up, you get more selling pressure on the US treasuries, and you get better opportunities for Japanese investors by repatriating that capital into Japan. That has an impact on the economy, and therefore an impact on the stock market as well, as you reverse this dollar milkshake theory and Japan carry trade. And that actually becomes mathematically necessary. The higher the rate goes down, it hits an equilibrium. But you can imagine that there's about $500 billion of exits globally that would come out, as some estimates have, over the next 18 months. Now, that doesn't mean that the US stock market will crash, because they're doing a two-tiered strategy. They're repatriating capital. They're strategically weakening the dollar so that international flows boost growth opportunities, while they redeploy your capital through your pension funds, your endowments, your insurance into foreign ETFs denominated in foreign currencies. But at the same time, they use fiscal dominance in order to wreck the American people that don't own shares, burden them with debt, devalue the debt, and at the same time, try and pump as much of domestic money into dollar-denominated assets. And they can do that through their index funds, quantitative easing, Federal Reserve policy, and weaponizing of media, which still pumps up the market. And they'll carry on with this as the proof of weapons network manages this transition. And so the yen carry trade holds about $1.2 trillion that is borrowed yen funding in order to purchase those global assets. What do they have? Stocks, Bitcoin, emerging markets as well, everything. And so you have this repatriation so that the Bitcoin trade gets less dependent upon the American trade as well. And this is very, very healthy for Bitcoin because that will go outbound investments into other countries as well. And what's America doing? Remember what we covered last week? They're just confiscating Bitcoin. So they've now got the largest confiscation Bitcoin strategic reserve that they stole from Bitfinex shareholders, victims of the Cambodian Ponzi scheme that China's trying to give back. But America just seizes it and puts it on their balance sheet. So Trump implemented the executive order that followed the gold executive order from the confiscations in the 1930s, copied much of the language, but without making it illegal to own. But they're setting up the apparatus in case they need to do that. So in theory, if America wanted to, I'm not saying this will happen, but they could do what they did in the 1930s. They could devalue the debt through fiscal dominance and monetization. And then they could confiscate more Bitcoin if they wanted from Americans. This is why it's very important for you to self-custody, determine where you want to live, figure out the strategies, because this will happen over an extended time frame. Not saying it will happen, but America's the main country that would do this. And then you can, reprice Bitcoin, confiscate more Bitcoin, accumulate Bitcoin into $1 million Bitcoin. And then obviously the Fed will use that to financialize, securitize, or they can reset the order. So you can use Bitcoin, gold, and the Federal Reserve as a strategy for the financial industrial complex to negotiate in these upcoming currency wars against sovereign countries that have sovereign wealth funds that are aligning through these blocks in this multipolar world. And so basically, that's why I say the future of America, Europe, the collective West, is a host for currency wars and financial wars. And so that ties into my geopolitical theses that we cover in part 3, where they're manufacturing civil unrest to usher in the surveillance state, which requires all this artificial intelligence technology and the partnerships with Saudi that we'll be covering in part 3. So basically, as Japanese rates and the yen strengthen, every position needs to be unwound. That creates a forced liquidation, and they need to find an alternative source in order to pump up the stock market as well, which we'll keep following. Now, December the 18th is when the Bank of Japan meets. And I'd say at the moment, if you look at the betting markets, what people are saying, they're saying there's a 50% probability that they will hike rates again. And that will make the carry trade worse. So we'll see, and we'll keep following what happens throughout. But you've got till the 18th of December as the next date we'll be following. Now, there were some interesting manipulations of unemployment data. Why? The Fed wants to reduce rates. Trump needs a narrative to give to MAGA. He's trying to artificially push down the short-term rate so that you and your pension can subsidize the below market value bonds as we enter into this monetization, dump the debt on you. In order to justify why you would reduce rates in case there's any inflation side effect, then you manipulate the unemployment numbers. Now, we're really starting to see, and we've covered this on previous episodes, that the large multinational corporations are replacing, particularly in the tech sector, their staff with Indian H-1B visas that are building artificial intelligence. And the largest source of unemployment, other than Doge and government, was artificial intelligence in warehousing. So that's building the robotics sector, which means that the deflationary forces, the reduction in oil prices and energy prices, or artificial intelligence, can only lead to more unemployment. Now, the oil industry needs massive investment. That really goes into what we'll be covering in the geopolitical section. We're not going to get into that today in the macro side. But anyway, that's how you dampen inflation. And then you have the unemployment numbers, which means less jobs. And I don't think we reverse that trend right now. And we're starting to see that by using and weaponizing government shutdowns, which allowed, to get more money into the insurers to manage those benefits, and also more money into the military industrial complex and the artificial intelligence, so that they can start doing contracts with each other, circulate the money around so it looks like GDP is doing very well, the stock market goes up, and then Trump gets to say we've got the greatest economy in the world, which he means stock market, despite the fact that America, all consumption is just the wealthy 10%. The vast majority of stocks are actually doing very badly, but there's like 5 stocks, tech stocks, which are propping up the whole index, and you just get to use these shenanigans. And so they're saying that we may not be able to release the next employment data. So there was some bad numbers, good numbers, and then they say they can change. So data just becomes impossible to follow. And these were every accusation's a confession. This is what America has historically criticized China for, because China has bad data. And now America's data is getting just as bad as well, as in particular, the employment numbers. That's a bad sign. It means that there's something that they're looking to hide there. Right. Now on the macro side, we're basically moving into the end of year window dressing phase. This is essentially where all of the different money managers that are all using BlackRock's Aladdin technology for their data feeds, they have to rebalance their portfolio, and they get knocked off the network if they have bad returns, or they get pushed up the network if they have good returns. And if they really aren't complying with the financial industrial complex, they can be pushed into bankruptcy, mergers and acquisitions, and acquired in distress. But this is where the money managers prove how compliant they have been to the proof of weapons network based upon their portfolio returns, and their ability to comply in constructing these financial weapons of mass destruction. So leading into December is where they're made or broken. That's where people get increasingly desperate. So this is where fund managers make desperate moves, or they reduce, moves that are about to lead to a loss. So crashing the price of Bitcoin leading into this phase into December, at the same time as rates, at the same time as reversing carry trade, at the same time as manipulating strategy with the January index inclusion decision, you get to manipulate as much Bitcoin out of people as well. And so expect, I think, continued weakness into December with lots of volatility as well. At the same time, remember what I said, they're taking the export-dependent countries, merging them, acquiring them, vassalizing as much as they can, because America's being shrunk into a regional power. We'll be covering more on the geopolitical section, which means that Africa and various other regions are connected to the regional sovereign, blocks that are out of territory from the covert warfare that Europe and America and the American Empire and the British Empire put them through. So you're seeing lots of little escalations. Remember the narrative? We're saving the Christians in Nigeria. I did a whole episode on that. This is basically saying to Nigeria, start focusing on a post-American world, because you need to go work with China, and you need to start building your sovereign wealth as well, because we're going to be saying, we're too unreliable as America. We're threatening you, even though they know, anybody that's on top of the chain knows that those ISIS militia are paid for by Western interest, as we often cover in the geopolitical section, to destabilize regions so that the financial industrial complex and the proof of weapons network can financialize and securitize those assets and use it for Western interest. We're now going through reverse IMF. Now, one of the countries, Senegal, they basically just announced that they found $7 billion of debt that the IMF basically said we can't refinance. And so they just found $7 billion of debt. The IMF says we're not refinancing. And so these are the types of indicators I use to recognize that we're definitely moving to this multipolarity. And Africa is going to be partnered with the Gulf countries, BRICS, and China moving forward, which is why we're seeing, these French-speaking colonies, these Portuguese-speaking colonies, they're all moving back and back and back, while America says that we're going to wage war and we're going to save the Christians, coming after Nigeria, all knowing that it's not going to happen. And America can no longer exert influence, but the leaders basically are told through these media narratives that they need to focus on moving away from America. This is kind of, how the proof of weapons network makes sure everyone's on plan. You weaponize media, push out narratives, control capital flows, at the same time as index funds going into various other constituents. So to me, these are the types of operations that indicate to me that the US is exiting from African resource extraction, destabilization, covert warfare, rape, massacre, pillage, destruction. And China's pushing the rebuild model. So this increases my belief that we're going to, over the next decade, enter into a very bullish phase for the global South and Africa as well. So I expect some kind of investments from a Gulf country, or maybe further and further into a BRICS China investment. And that means that we're moving to a rebuild strategy rather than a violent strategy as well. Now, just before we go into the geopolitical section, it's really important to start looking at many of these rare earths and other types of things. I've often said that what's happening in the Middle East, now that the forever war model is coming towards an end, cover that more in the geopolitical section, that it's not about nuclear weapons, it's about nuclear energy. And so what we're seeing with all of this AI demand for oil, natural gas, and electricity and energy is it's not a substitute with renewable energy or solar energy or wind energy or all these other types of energy and nuclear energy and geothermal energy. It's actually all energy as much as possible. And there's got to be about $27 trillion of investment. So now you don't hear anything about climate change. You don't hear anything about ESG controlling capital flows. We're just about how can we extract as much investment by pushing the AI war narrative and making sure that China and America are in that AI war narrative to make sure that the proof of weapons network gets all of that investment to prop up the stock market and facilitate it by essentially the Americans taking on the debt, and that is reallocated towards the AI bubbles, and then they push around those contracts, socialize the losses and privatize the gains, and push up those stocks at the expense of the economy and the American people. Manufacture civil unrest so that the AI can be used as part of a police state, surveillance state, and Palantir. Now, Palantir got knocked down a peg or two. Their inflated price definitely got knocked down. And you've got the PayPal mafia, Elon and Peter Thiel, kind of being knocked down the network. I'm sure there'll be more vassalization because nothing stopped that train in terms of where they're going. Because the most important thing about stock price is not anything on reality, is geopolitical and strategic importance to the network so that they can negotiate via the government these choke points and extract more into their stock price as well. But anyway, there was a lot of talk around thorium. This could basically give Saudi an edge, but it needs partnerships in order to utilize it into its nuclear energy program as well. And so the country's nuclear program is basically fully secured, but it requires some domestic uranium, which they've been working on, resources, but they can't do it alone. They need to work with technical partners. And so this is the type of thing that leads us into why are we getting these massive geopolitical shifts? And what the hell was this $1 trillion investment between Saudi Arabia and Trump? Is that all just manipulation in order to pump the stock market and nothing materializes? And what are the geopolitical consequences? We're going to be covering all of that in part 3. So if you enjoyed this, make sure you like, share, make sure you subscribe, hit the bell symbol, hit all. We break this down into smaller sections and artificial intelligence summaries in case you just want to watch 5 minutes or a 15-minute summary, or dig deep like me is into the whole thing. So make sure you get those notifications so that even if you miss this, you're able to do that. But you can watch this on Rumble. You can go to simondixon.com, join my newsletter. We back up everything there. And I also give you free digital copies of my book, courses on how to self-custody Bitcoin, completely free. No sponsorship, no ads, no upsell, no business model, just community building so that I can help people manage this transition into a world of Bitcoin AI, central bank digital currencies, stable coins, surveillance state, fiscal dominance, and everything we've been covering. So I'm going to take a little bit of water. Please put a comment. Please share. Go to my podcast, subscribe, follow on all the different places. Follow me on X where I give real-time updates, and we'll be back in a second.